Hello, good afternoon.
Sarah, how are you? Mhm.
I'm fine. I'm good.
How is
How are
life?
you now?
Bad though.
Life.
Bad.
Life is good. We
Health
thank
too.
God for life.
Mhm.
How
So
are you
Sarah,
now?
what's up? How you doing?
Fine, fine. I'm good. How are you? And baby and
We're
hubby? How's
trying
everybody?
to be fine. Can you hear her voice? She's smiling.
Yeah, I can hear your voice. You want to talk to me?
Abby. Yeah, say hello. Okay.
Oscar, welcome.
Thank thank you. Uh,
I think I think we'll just go ahead so that people can join us. Because 7 passed already. Thank you for joining us today, Shay. Even though you've been busy all through today, we're still able to make it just in time. So thank you very much.
you're welcome. You're welcome. I'm happy to contribute to the movement.
Thank you. So I'll just let you go on. I'll let you go on with the introduction, and then you can just go ahead. Uh, yeah, you can just go ahead, and people will join us. So today we'll talk about the types of investment. This is actually our second personal finance session. So today is about the types of investments that are out there, and Sheyi is going to talk about the types of investment, and eventually I'll talk about stocks and how we can invest in stocks. All right, go
Yeah.
on.
All right. Thank you, Yusuff. So, like I said, or like we discussed, there are various kind of investments, and it's best to just put them in buckets. And we highlighted fixed income, which most of us know as bonds. We highlighted equities or stock. We also highlighted every other one under the alternative investment buckets. So talk about real estate, derivatives, cryptocurrencies and the likes. So I'm going to start off with fixed income because I understand Yusuff is going to handle equities. So I don't know what the current knowledge is of those who are logged in on fixed income, but I would try to make it as simplistic as possible. And if you have questions, please feel free to call my attention. To make it brief, fixed income pretty much are investments that help preserve your capital and also your income. So this income would be the interest that you gain from investing in fixed income assets, right? And the predominant type of fixed income assets are government bonds and corporate bonds, right? So we hear governments, floating all sorts of bonds. Some of you might be familiar with Euro bonds and the likes. This is an example of fixed income instruments. Corporate bonds, this is when companies such as Microsoft, and the likes seek to raise funds, but not from, shares, not through shares, but by issuing bonds to the public, right? So with fixed income instruments, I think it would best if I highlight their benefits. I think the benefits will help us get a better appreciation or understanding of how they work. So number one on the list is they're actually a good source of diversification, right, from stock market risks. So this means obviously we are not investing in equities. You can invest in bonds, and the good thing is, they move in almost opposite directions. So that way, if the stock market seems to be tanking or doing terribly, chances that the bonds market is probably doing all right, and vice versa, if you understand what I mean, right? Also, capital preservation. The whole idea is that you invest a certain amount of your capital and you get interest on that capital. So the chances are you don't lose your actual capital, except for some extreme circumstances. Chances are you just keep getting interest on your capital. Then at the end of the tenure, if it's a 5-year tenure, you get your capital back and your interest. So that's one of the benefits. There's also income generation that also ties into the interest you keep getting. It's almost as though you, I don't know, build a house, right, and rent it out to tenants, and tenants can keep paying rent to you. So that rent is a form of income that keeps, flowing in. You don't actually lose your capital value. So then also you get total return. Anyway, that total return relates to the amount of credit risk you're looking to take. So I didn't really touch upon the type of risks yet. I'll be going into that now after talking about the benefits. But those are pretty much the benefits associated with fixed income instruments. Major risks, you have interest rate risk. So interest rate risk just talks about the fact that interest rates fluctuates, and that's depending on what the central government of any country is looking to fix it at. Interest rate directly affects the value of your bonds, the price of your funds, because and I don't want to get too technical, but when calculating the price of a bond or the value of a bond, it's usually discounted, using interest rates, right? So if you're looking at a bond, the price of a bond right now, say it's 10,000 naira, and you want to, in 10 years, and you want to, calculate the present value, you have to discount that at a certain interest rate, right? And the higher the interest rate, the lower the price of that bond if you discount it down to today. So, and the lower the interest rates, the higher the price of the bond. So these are risks you have to deal with. Interest rates are not fixed; they keep fluctuating. So that's also a very potential risk. There's also inflation risk, right? Inflation just is not good for any side. Whatever the investments, because it erodes your purchasing power, right? Assume you're meant to be receiving 10 naira every year, and inflation keeps increasing such that 10 naira that could probably buy 2 items this year, by next year can probably buy just one or even half the item. So that completely ruins the whole idea of getting a fixed payment from your fixed income interest, right? And there's also credit risk. Credit risk is pretty much the fact that, this company, and this is more common with companies, right, and not governments. Some governments have defaulted, but, chances are slim because the assumption is governments, have the ability to print out more money, right? So whenever they are out of money, they can print out their own currency. But with companies, right, companies can actually liquidate or go bankrupt. And, that's bye-bye to investments, right? Because there are hierarchies to those who they will settle. And chances that, fixed income investors might not, get or be able to recover the full amount of their investments. Liquidity risk just talks to the fact that you might not be able to, trade your bonds. You might not be able to actually find a buyer for the fixed income assets in which you've invested in, for instance. And that also is common. It's not so common with equities, right? Because you have like a transparent market. Well, globally, most countries actually do. So that's also a risk with fixed income assets. So some of you are probably thinking, okay, I like this. I like the idea that they're kind of safe. They're also safer than equities, by the way, just to put that out there. And the challenge with, investing, if you're thinking, how can I invest? It's just that, with fixed income, the price or the amount required to actually invest as an individual can be quite enormous. So it's usually best to invest, through a mutual fund, for instance, right? Where no matter how small the money you bring, you can actually get a piece of a larger bond. So even if a government is floating a bond or a company, you might not be able to, invest as an individual, but, as a group through a mutual fund, you might be able to, or through exchange traded funds, right? You might be able to invest. So that's about fixed income. I've tried to give you a rundown on what it entails. It would have been nice to jump into equities, but I'll leave that to Yusuff. I'm sure he'll give you a very good coverage. Right now, I'm going to jump into alternatives, right? Alternative investments are mostly called alternatives. So when we're talking about alternatives, we are looking at equity. We're looking at equity. Sorry, we're not looking at equities. We're looking at everything else but equities and fixed income, right? Because it's hard to classify them or tell you, okay, these are what alternatives are. But alternatives are everything but the traditional investment instruments. So we're not looking at equities and we're not looking at fixed income. So everything else, outside that, those two, we kind of class them as alternatives. So we're talking about so, for instance, artifacts. When I say artifacts, I'm talking about collectibles. I'm talking about commodities, for instance, right? I'm talking about real estate, right? Some of you are familiar with private equity investing. That falls under alternatives as well. And I'll probably touch on derivatives as well, which is a bit more complex, a bit more interesting as well. And some of you, well, probably all of you are familiar with, cryptocurrencies right now. I think everyone, that's what's on the lips of everybody right now. So those two fall under alternatives. So quick rundown of each of them. I'll start with commodities, right? With commodities, we're talking about, physical material, natural resource that you can actually feel, touch, smell, for instance, corn, maize, oil, beef, natural gas, all those, yeah. And how they work, right? There are two ways. You can, one, own these assets, or you can actually invest in a company that owns them or invest in them, right? And that's, the idea of investing in commodities. So take, for instance, you either own like an oil plant, which you physically invested in because you paid money to set it up, or you invest in a company that actually does that. So take a refinery, for instance, or maybe a Dangote refinery, for instance. That's a way of investing, in commodities, right? What do you really need to know? They can be quite volatile, right? Because these prices are driven by demand and supply, right? So depending on what the demand is like and what the supply is like, right? So that's also something to note, right? And it's easier to actually purchase the shares or ownership in companies that actually provide or produce these items as opposed to buying the items themselves, right? So yeah. Next is collectibles, right? Collectibles, I'm talking about artwork. You go to a museum and they tell you this artwork was done by Leonardo da Vinci. It's £1 billion or something. And, I look at the thing and I'm wondering, really, I can paint this thing, myself. But, these things are the value in them, for art lovers. So I won't class myself as an art lover. I'm sure there's some art lovers here, right? But if I look at the painting, sometimes I don't just see it, right? Some people see it and they're like, it's amazing. It tells a story. I don't see it. Well, I guess I'm different. I guess I'm different that way. So these collectibles can be very pricey. So in the hands of somebody, an art lover, that painting can be worth £1 billion, and that person will be willing to, buy it for maybe 150. You know, more than that is what I mean, right? Over £1 billion. For me, I'm probably not going to part with one kobo, right? Because it's of no value to me. So these collectibles are alternative investments where you can put your money and they would appreciate over time, right? Some people, it's a bottle of wine, right? They would keep that wine. They'll tell you it's a 30-year-old bottle of wine. Okay, good for them. But for me, I don't see it too, right? Because, I mean, oh well. Anyway, there might be some wine lovers among us. So don't let me go too deep into that. Anyway, but yeah, so these are examples of collectibles. It could be a car, right? They'll tell you this car is a Volvo from 1864. Maybe, the first president of Nigeria drove in it. Do you get? So things like that are collectibles that you can actually invest in. A rare book, for instance, right? Yeah, so coins, all these coins, maybe in England, for instance, the first set of coins they used, those could be, very valuable, right? So that's an example of, how they work. So how it works really is the fact that the collectible's value comes from its age or rarity, how old is it? How rare is it, right? So the older it is, you find, and the rarer it is, you find the more expensive it is, right? And a lot of people try to preserve it in its original state, right? So, so sometimes they use it as collateral value as well. So I think that's that about that. Let me see if there's anything I can share. So yeah, they're mostly traded in auctions as well, right? Because you can't really put a specific values to these items, right? So that's why you see people yelling different numbers, 10,000 going. You hear 20,000 going. Then well, somebody then calls an astronomical number and he has to take it home. So that's how they usually put prices on collectibles such as these, right? Very quickly, onto real estate. So real estate is quite popular. We all know real estate. I mean, we all live in a house or have rented or have bought one. So we kind of understand how that works. But it's also an alternative, right? And some people even class it as a form of fixed income, right, for the owner, because you then keep getting rent from people. The one benefit or advantage of it actually is a good buffer for inflation, right? You can see how these other investments suffer from inflation and you lose the value. Real estate, prices, especially with land, right, which the houses are built on, it doesn't depreciate, it appreciates, right? And with rents, I'm sure a lot of you are aware that, if not every year, but, rents keep, spiking up. So in certain places, even in London, even in Nigeria, you'll find that they were a certain price this year, then they're higher next year. It's because they provide buffer for inflation. So as inflation numbers go up, these house prices as well, they go up as well. What to know? Collecting rent, tends to be the most reliable and accessible, really, way of, earning returns on real estate, right? As opposed to, buying the house or building the house and collecting rent, you can also invest in a real estate investment fund, right? Or investment trust, they are called rates, or even a company that's focused in real estate, right? So that's also another way to go about it, right? Um, yeah. Uh, the major risk, really, and I don't think I mentioned this at the start, of alternatives it's pretty much liquidity, right? Because it's not so easy to move these items on the market, compared to equities, for instance, right? If you have a whole house now and imagine the economy is not doing so well, this COVID period, right? What are the chances that you'd be able to, move that in the market, that you find a willing buyer? So I think that's pretty much it. Private equity is next. Obviously, this refers to capital that is uh, provided to business owners, right? And there are different stages. You hear about seed stage, angel investors, right? And there are different rounds of investing, right? But it pretty much talks about, as opposed to shares, which is money from the public, right? Private equity talks about private investors. It could be one, it could be two, three, four, who are willing to invest in your company, provide the private investments you need, and also oversee the management of the business, right? And just to make sure that they drive returns out of that business. So this is not like selling shares to the public. It's just having the ownership of the business or the funding of the business in the hands of about two, three, or four people who are willing to invest. And this kind of investment can happen multiple times in the life of a business, right? We've heard about some fantastic stories. The Paystack fintech company, who raised about $150 million. Flutterwave as well, who has just recently been valued about for $1 billion. They've been called a unicorn as well. They raised about what's now $200 million or so. No, $150 million. Which took their value to $1 billion. So a lot of these companies have raised money in the past. Smaller amounts to larger amounts, and that also helps their growth as well. So private equity investment is a lot more risky. It's probably one of the riskiest of them all, especially with venture capitals, right? Because venture capitals actually invest in about 50 little companies, right? The chance of only two of them actually going on to do big things, right? So chances that 47 of those companies would fail along the line, right? So you can imagine, but those two that then go on to do well, they tend to recoup pretty much of the loss and even make some profit on those companies as well. So that's it with private equity. And you really have to be patient, right? Because this is you growing with the company. It could take 2, 3, 4 years. It could even take longer. So that's private equity. It's a lot more risky, right? So I'll jump now to derivatives. So with derivatives, a lot of people, well, even for me, when I got to learn about it, it was a bit complex trying to understand it, right? Because even the name itself. But essentially, derivatives pretty much derive, as the name implies, their value from a different asset, an underlying asset, right? So derivative is not an actual or physical asset, so to say, that you can hold, right? A derivative is like, I'll call it a contract, right, between two people. So take, for instance, myself and a friend of mine, and we're going to a contract, and this contract is probably based on the price of oil, right? And I tell my friend that if the price of oil goes up tomorrow, I'll give you 5 naira, and if it goes down tomorrow, I would give you 5 naira, right? So that contract, right, derives its value based on the price of oil. So oil is not really what we are trading, right? So it's the derivative contract between us, and it could be on anything. Okay, it doesn't have to be just oil. It could be on the house. It could be on even the weather. We're saying if it rains tomorrow, I'll give you 20. If it's sunny, you give me 20. So that's pretty much a rough idea of what derivatives mean, and it's quite risky. But it can also be good. It can be good for businesses that are not quite sure about what's going to happen in the future, such that they try to move to, manage their losses or exposure, using derivative instruments. And we have all sorts of contracts as well. That's where we start talking about maybe futures contracts, forwards contracts, and the likes. But that's, going a bit complex anyway. But how they work basically is just to lock in a price and position, right? For both parties, right? I'm locking in that, okay, I don't know what's going to happen tomorrow, but I'm just locking in my position that, okay, this barrel of oil, right? It's 5 naira today, or it can be 10 naira tomorrow. I'm not sure. But anyway, I'm telling you that I'm buying it for 7 naira tomorrow. Do you get? Even you don't know. So that tomorrow, if the price goes to 10, I'm buying it for 7 regardless, and I'm making a profit, right? I can then go and sell it for 10. But that tomorrow, I'm buying it for 7, right? So companies do this a lot, especially with their suppliers. They're trying to buy wheat or tomatoes or whatever it is, but you're not sure what the price will be tomorrow. So you can enter into a contract, with your suppliers and tell them that, okay, on a future date, I'm going to buy this thing for X amount, regardless of what it is. So the thing is, it might be good for me that the price is higher than what I've locked in, right? I've locked in for 7, the price is 10. Good for me. But it could also be that the price is 3 naira tomorrow and I've locked in for 7. Bad for me, right? But I still have to honor that contract, right? So it's pretty much how derivatives work. It's kind of a contract on something. It derives its value from the movement of that thing. So I hope I've been able to do justice to derivative, because it can be quite tricky trying to understand what it is. Anyway, I think that's about it. Those are, yeah. So, and the last one, yeah, which I was saving for last, is cryptocurrencies. I'm sure everyone knows much about that anyway, but cryptocurrencies are quite interesting. I think they came into being in 2009 or so, anyways, and based on the blockchain platform. What cryptos do? They are digital currencies, right? So you won't physically see a cryptocurrency. Well, not for now, anyway. Uh, they aid trading, buying and selling, obviously transfer of value, and some countries are receptive, some not so much. Nigeria inclusive. The challenge is understanding it, right? A lot of people have been trying to figure it out. Like, what is this thing? And in the simplest form, anyway, it's a means of transfer of value. It's like money, just different in the sense that it's not exactly regulated by the CBN or any authority, right? And what's most risky about it is the fact that it's actually influenced by demand and supply. So in the event that there is no supply, right, you'd find that the prices are sky high, right? And in the event that there is not a lot of demand for it, right, the prices will tank. So more recently, I think Bitcoin is one of the most popular. There are a number of cryptocurrencies, by the way: Ethereum, Bitcoin, Litecoin, and the likes. But I think Bitcoin is the most popular and the most expensive at present. A while ago, I think Elon Musk, invested about, I don't know, $1.5 billion or so into Bitcoin, and the price skyrocketed, and there was no underlying fundamental. So why is it doing so well? But that was it. Somebody just bought so much, man. The demand was so high that the price, followed as well. So in the event or whatever, whenever they wakes up and it's like, what, I'm going to tank this market, and it sells everything, except for the price to crash as well. So it's quite risky. But people are riding on that right now because it's new, it's interesting, it's exciting, and it can go either ways, right? It's gambling in a way. So I mean, I want to encourage people, especially those in retirement or those who are, cautious investors to, dive all ahead in and, put so much into it. But I think I would just encourage them to diversify their investments, right? Depending on what you want and your level of risk tolerance, right? You can choose to invest or choose not to invest, right? So, I think that's about it. Just looking at the screen now, I think the only thing I haven't spoken about is precious metals, and actually they fall under alternatives as well, right? So, I think that's pretty much covers art, collectibles, mutual funds. Yeah. So, let me know if you have any questions. I think that will be all from me for now. Thanks.
Thank you very much, Seyi. Thank you very much for that. I think with this, we know a lot about the types of investments that are out there. Okay, AK, you can go on. You have question.
Yeah, quick question here. So this graph you got here, is that the proportion or the ratio of investments across the globe, or that's just a random pie chart?
It's just a random one, just the types of investment.
Okay. Second question, collectibles. I don't know have you guys heard about this thing called NFT? So have you heard about a thing called NFT? I think it's called non-fungible tokens.
Yeah.
This question is actually for Seyi. Seyi, do you know anything about that, or is there anything you can tell us about? Because I think it's related to collectibles, but I'm not really sure. So,
with I think I don't know a lot about it, but I actually heard about it in relation to blockchain. Actually.
Okay.
Yeah, it's a unique digital item, right? They're not exactly interchangeable, according to what I was told, right? For instance, it's linked to the blockchain, right? The way I was explained to,
Yeah.
And they are they form a digital database, right? For cryptocurrency, they underpin cryptocurrencies, right? Like the likes of Ethereum and Lightchain, right? What else did I learn about them? So I wouldn't say I can exactly explain what they do, but I just know they underline cryptocurrencies, and they're not exactly collectibles. I don't think you trade a non-fungible token in itself. I'll probably have to do a bit more research on that, right? Well, from what I understand them to be, they provide a form of database in the blockchain, right? And the likes of Bitcoin, Ethereum, and other crypto actually trade.
Okay.
Yeah.
I've been doing some personal research as well, and I find it very, very interesting. Just looking to understand how it works. So similar to what you said about collectibles, pictures. You see random pictures, and people put value to that picture. So based on my research, so you can have like a digital picture. You put that digital picture on the blockchain. Then people bid on the picture, and they put value to the picture.
Right.
So based on the value they put on that picture, that's the price. So you can buy and sell. And all of this is built on what's it called, the blockchain technology as well.
Interesting. Huh.
Yeah, okay. But I feel like it's still very early stages in terms of an investment options, but it'd be worth understanding how it works and what we can do to make the best of it, really.
Well, that's cool, because I'm sure this is how someone threw the word Bitcoin sometime in 2008, 2009, crypto, and because people didn't understand it, and here we are now. So it might be worth looking into researching. Thanks for that. Anyway, I'll definitely read a lot more or learn a bit more about it.
All right, cool. No worries.
Thanks for that, AK. Yeah, they are the new craze in town now, the NFTs. And the people, when the big guys are behind it, people tend to actually look into it closely. Elon Musk as well said he was going to sell, or he was going to sell something as NFT or something. I can't even remember. And we have Mark Cuban as well that just sold, was it 6.3 million or something? as NFT. So I mean, those guys are going into it right now. So people are thinking about going into it as well. Thanks.
Hello.
Hello.
Yeah. Good afternoon.
How are
Hear
you?
me?
Yeah.
Good. Yeah. So I would like you to start and talk a little bit about the world of investment shifting to something we call the world of investment being influenced by behavioral something, moving away from the fundamentals. That is, people follow fundamental in making investment decision, but now contemporary, let's say, or let me say, over the past 3 or 4 months,
Yeah.
their influence is overweighing on that. I'll just like you to chat a little bit on this.
Seyi, did you get his question?
The network was breaking, but I think it was asking for time,
Yeah.
right?
What did you say?
It was asking about behavioral sciences in relation to investments, right?
Exactly. That people are now moving away from the fundamentals to behavioral finance.
Yeah, behavioral finance covers behavioral finance covers a bit more information than what it means.
Yeah.
We're looking at how human beings think and act.
We can't really hear you, Seyi.
Hello, can you hear me now?
It's still a bit low.
Can you hear me now?
Yeah, perfect. Yeah, go on.
Right. You can hear me, right?
Yeah.
Okay. So, like I said, with behavioral finance, right, we're looking into how human beings, right, think, the way they do things, what motivates us to do certain things. And we're now, looking at that in relation to finances, how we invest, how we take certain decisions, right? This even feeds into, what kind of investment someone with certain characteristics or personality traits to invest in, right? So some companies actually have some form of templates or some form of questionnaire in which you enter some personal information about yourself. And from the behavioral patterns they've learned, they can actually identify what kind of investment this person would be willing to invest in. So what makes AK invest in this and what makes Yusuff invest in that, right? So you'd find that with the evolving world, right, human beings are evolving as well, right? Technology has made the world a global marketplace, right, where we can do all sorts of things. So traditionally, you find our parents probably invested just in stocks, right, and maybe bonds, but we the younger generation, our behavior, and this also fits into the need for quick gratification, right? We're trying to get the most benefits as quickly as possible. So you find that some of us are not as patient, right, investing in stocks or bonds, right? A lot of us want what's quick, what's hot in the market, right? And this even fits into, and these are for people who, also gamble on football games, people who want to make a quick return in 90 minutes, right? People who also, this also fits into cryptocurrencies as well, right? You'll find that a lot of the younger generations are those who are more invested in such certain kind of assets, right? While either those who have a knowledge of finance and or probably of a certain age, those who would invest in traditional investments like equities and fixed income, right? Alternatives, look at non-fungible tokens that AK spoke about as well. These are things that are new to us, right? These are things that we realized that yesterday they were $1 and today they are $50,000, right? So those are the kind of things that behavioral finance looks to understand. Try to understand our aversion, what we're interested in, and what kind of investments would appeal to Seyi and would not appeal to maybe Yusuff, or what kind of investment would appeal to Yusuff and maybe not us, based on various characteristics. You take into account your knowledge of finance as well, and your risk aversion. So I don't know if that explains well enough.
Yeah, it's explained enough. Thanks.
It makes sense, right? Okay.
because of the fact that this is a new generation, like the instant gratification you just talked about, I feel like people are moving into more behavioral finance than even the fundamental. How many people really? What fundamentals can you really do on cryptocurrency, for instance? But people are going about, the psych on it, that okay, this is what people are investing in, let me invest in. I think we are now gradually seeing more investment into ideas, and just before people even really research about stuff, they are already planning to invest in it, because this person has done this person, the big guys, maybe Elon Musk or someone has talked about it. You see the stock, like what happened with what was the talk that Elon Musk raised that? So we are seeing even the stock market affected by just personal traits of just one person, a couple of people. So I feel it is because of the fact that people are looking for the hottest thing right now. We are kind of laid back on the fundamentals and going into more of behavioral finance, and just trying to quickly, the fear of missing out, just trying to quickly jump on the bandwagon, just to make sure that we also have a piece of the pie. I think that's what we are seeing these days.
Quick question though, what is the fundamental of investment? Because for me, my understanding is you put your money and you get return. So what is the fundamental of investment? Based on what you guys are saying, what I'm hearing is it's better to invest in assets that are slowly growing. Am I right? Or assets that take their time to grow, or I don't understand.
No. Is someone
okay? Yusuff, go on.
Yeah, the fundamental I'm talking about is that, so when you fundamentally look into a company, like what are the profits, what are the financial performance of historical data, charts and all that. That's basically what. So people are now moving away from, okay, because usually when you want to invest in a stock or bonds or something, you go back historically, you check the financial performance, you see in fact, you get up to the point that you see the staffs, you analyze their business models. That's what we mean by financial fundamentals. So when you invest based on their fundamentals. So, but these days, people are now doing less of that. Like, okay, let's see their financial performance over the past years. People are now going from that. They are not going into fundamentals as much. They are now going into behavioral finance. Okay, Makuban just invested 6.3 billion in this thing. The stock has skyrocketed. Let me quickly put money into it. Then they can now go back and be like, okay, let me see the charts. You get. So people are now more about, okay, let's see what is happening in the market. Let me ride the wave before they really go back into fundamentals. And that was not the case before. So I think it's a generational trait, I guess. Seyi, you were going to say something.
Yeah, Yusuff, I think you've answered perfectly. I was just going to add to what AK said, that you're not necessarily, you don't necessarily have to invest in something that is growing slowly. Actually, that's besides the point, because a lot of companies, take Tesla for instance, space of 5 years, they've grown astronomically, right? But what I'm just trying to say, or what we are trying to say when it comes to fundamentals, is you need to know, what is underlying or responsible for that kind of. And I gave an example of Bitcoin, cryptocurrencies, right? This is an asset, right? Digital assets that moves with demand and supply, right? You can't really hold, one person responsible, right, for what happens with the prices, right? If I buy a large amount today, the prices will go up. If I dump them today, it would go down, right? As opposed to take, for example, a company or even a football club, right? Some of us gamble on football matches, right? And as opposed to, and this might be a good example, as opposed to just going, say Barcelona is playing Chelsea today, I think Barca will win. I drop my money on Barca because everybody is doing that. How about you do a bit of research, right? What has Barca played in the last 10 games, right? Who is injured, right? Who is on the bench? What's the presidency? What's the board? What's the board saying, right? Who's the current coach, right? How's Chelsea's form been? So it's that bit of when you come out and say I'm investing in Barca to win this match, right? When somebody says why, you have these kind of fundamentals to back you up to say, okay, this is because, and it's also the same with investing in maybe a building in a certain location. You can say, oh, this is a prime location. Next to this building is the World Bank. This building attracts investors. You have those fundamentals to hang on to, right? So a lot of assets, that we invest in today, we can't really confidently point to, some fundamentals that are responsible for the growth or the performance of these assets, right? And that's what we're just trying to say, that this generation needs to care more for fundamentals, right? And not just follow the bandwagon or develop this head mentality of everybody's going in this direction, I'm also going that direction. You can as well, right? If you have fundamentals to hang on to and say, okay, take for example Bitcoin. Okay, what's going on with Bitcoin? Tell me why we can invest in Bitcoin. And you have some solid points. Fine, yes, we know it's a digital asset. Fine, okay. What needs to go wrong, right? And I'm not talking about buying and selling, demand and supply. What needs to go wrong that I can then say, oh, there's definitely going to be a hit on Bitcoin. So take, for example, Apple shares, right? If tomorrow you hear that Apple fired its CEO, I promise you, the shares of Apple are going to tank. They will come back up, right? But they will tank at first. Then if you hear Apple fired its CEO and maybe brought in Donald Trump as the CEO, I promise you for a longer period of time, those shares are going to tank. So, these are kind of fundamentals that go into why a share is what it is, right? So that's what we also want people to consider when they invest in things, right? Try to get more information about it.
All right. Thanks, Shay, for that. Okay. Dr. Adejumoke. Yeah, go on.
Based on what has been said, my question here is looking at the recent craze in behavioral finance. How do you think this has affected our mental health as a generation? Because looking back I remembered when my granddad bought shares into Nigerian breweries, and like you said, they did their own background check, went into the figures, checked how this thing works, and these shares from Nigerian breweries has been passed on from generation to from my mom to us now, and we are benefiting from it. But if we look at the recent craze in behavioral finance, like you said, and the increase in different mental health issues, how do you think this has actually influenced on our mental health as humans?
Right, that's a loaded question anyway, so I'll try and construct it. By the way, congratulations on your Nigerian breweries shares. By the way, that's a very, good investment that your grandfather made. Some people can't boast of, because to be honest, he's one of the lucky ones, right? Because some people have shares that they don't even know they have anymore. Some have unclaimed dividends in years. Some even got duped by one stockbroker, carrying. Yeah, well, government plans to borrow your unclaimed dividends, but yeah, some people got duped by one stockbroker somewhere. So you are one of the lucky ones. Anyway, with behavioral finance and mental health, right? So mental health is a sensitive subject, right? A lot of people suffer from it. Some people, well, it's more recently people are coming to understand that it's actually a sickness, right? And mental health, you find people commit suicide, right? And people start to wonder what's wrong with this person. And I was reading a post, I think last week, when the Nigerian government said anybody that is caught trying to commit suicide, they will imprison the person, right? So that's funny because, one, it means the person didn't successfully die, right? And I don't think prison is where the person should be going, as opposed to seeking help for that person. So with mental health, I initially, the mentality was, Nigerians are a lot more resilient. It's only the white people that kill themselves. That's not true, because right now we are finding increased cases of people committing suicide even amongst us, right? So it's an interesting topic that should be paid attention to. Anyway, I think the subject of investments, right, is very, and just to take you back to 2008 when the stock market crashed globally, a lot of people committed suicide, just so you know, right? So investment is a sensitive subject as well, which also mental health, right? So I think it's important for people to get, and even with proper advice and representation, things can still go wrong, right? So it's important to, and there are also different investor types, right? We have those who are cautious, we have those who are risky, but I think it's better to at least have a a good advisor, right, who can help point you in the right direction. And also not put all your eggs in one basket. Diversification is a key word, right, when it comes to behavioral finance, right? You don't want to put all your funds in cryptos, you don't want to put all your funds in even shares or even in bonds, right? Because, if it goes bust, right, we then start to think about the blowback, the repercussion, who's going to want to commit suicide, right? Who's going to want to go into stealing, right? So for we the youths, right, yes, investment is good. It's not just for the older people, and it's good that younger people are investing as well. But at the same time, you don't want to be too greedy, right? You also want to be careful to make informed decisions, and more importantly, not put all your eggs in one basket. All of these do not still guarantee success, right? So I think it will be a step in the right direction and some form of buffer or cushion for any mental health challenges that may blow back from investing in a certain asset, right? So the older ones will say don't put two legs to check the depth of a pool or a pond, right? You probably put one leg in first, see how deep it is then. So same with investment. Let's be careful. You don't want a situation where you find out youth start killing themselves because investments crashed. Then it's even a bad reputation for the investment world itself. Even finance professionals, they will say it's our fault, right? So it's also part of our responsibility to, educate the public and try to, warn people to be careful of fraudulent brokers, fraudulent investments, do their due diligence, right? Check for fundamentals. And yes, fine, we won't take risk every now and then. Fine, take risk, but don't put your life savings into it, right? Don't put something that would, burn down your entire existence, so that will make you want to contemplate suicide. So yeah, with behavioral finance and mental health, I think those tips are quite important. Do your due diligence, get quality advice, don't put all your eggs in one basket, and just embrace being cautious. I hope that answers you.
Yeah. Yeah, you need to
Yeah, thank
understand
you very
yourself
much.
as well. Just ensure you understand yourself and the level of risk you are comfortable with. I've seen people put their school fees, put it in something that they feel like, okay, let me quickly put it in Bitcoin so that I can quickly make returns or stuff like that. And I feel like these days we are having so much of the fear of missing out that because there's Twitter, there's this everything on social media, encouraging us to join the the edge mentality, so I feel like it's been because we have the social media and everything now that we can easily see what people are up to. I feel like people are now taking unnecessary risk that they are not comfortable with. They are now taking them because they don't want to miss out. Because I know that Bitcoin, for instance, a lot of people did not understand the Bitcoin, but on Twitter, that was what was trending. Everybody was about Bitcoin. It's now 40,000. Okay, I'm keeping my own till 50. So I'm sure that if you didn't even have money at that time, but you just add maybe your school fees, you just want to quickly put it in that, okay, this thing is going up now. The only way it can go is up. So let me just quickly put it in it. So I feel like technology and this new age has increased the mental health issues around finance, because back then those grandpas, they used to check the newspapers. There was no social media now. So for you to really want to invest is a personal decision, not that you are, yeah, not because of the fact that you saw that a lot of people are investing on social media, but it used to be a personal decision, and then they ask people. It was easy for people to ask for advice and stuff like that. So I feel like these days people are pressured into going into investment before even doing their due diligence, understanding yourself, and knowing the level of risk that you are comfortable taking, not just investing. Musa said invested his house rent, and then landlord will now throw you out. Why would you have mental health issues? So that's what we are seeing these days. So people are trying to just join on the bandwagon that I don't want to miss out on this thing. Everyone is talking about it on Twitter. Let me just quickly jump in. Let me quickly put this house rent in it so that I can quickly earn returns. So that's what we are seeing these days. And just like Oscar said, she said, we have to make sure that we are cautious, put in effort in your risk management as well, and diversify. That's very, very key. So Fola Shade is asking a question. So she says,
Sorry, I just
oh yeah, oh Gigi, were you going to say something?
sorry, so I just want to build
Yeah,
on what you said
yeah, go on.
concerning social media adding to the our
Yeah,
financial behavior in this generation. Like you said, social media plays a big role.
it does,
And
yeah.
then this the investors or the firms that are in charge of like attracting new persons to like invest in one thing or the other, they too aren't helping matters. Because you get to see, I don't know for others, but for me, you get to see most times that you'd see an advert on social media asking you to invest in something, and then the returns they can be outrageous,
Yeah,
and it will be in a short period of time.
yeah.
They just give you that catch there, and they don't give you further information like, okay, for you to actually have these returns, these are the terms and conditions, or they don't give you proper information per se.
Exactly. Yeah.
So people that attracts people to invest in such, meanwhile is to their detriment, and they don't get to find out more information on that. So that's the major issue. So moving forward now, I'm glad we're having this discussion on financial behavior. I feel there's a need for us to be informed of places, because another thing, in addition to the social media and marketing tools that these investors investing firms use, there's also the issue of finding the right information or having the right information brought to you. Like for instance, now there are many people that, yes, they want to invest, but yes, the internet is at their fingertips. They can search for a particular company, look up a particular company and find out what they're doing, but they might not have the patience to go and keep tab on that company, like having to look for what's going on in that company for that day, or having to go back. Like, okay, they might think, oh, I'll search for this company this time, but then they forget, or they have a truckload of other things to do. So I don't know if you can recommend any sites or apps or platforms where people can get financial information, even if it's just being, even if it's something they subscribe to, that's being brought into their email, that, okay, this is what's happening with this company at this time, so that way encourages them to look up the companies they want to invest in or they are invested in, and be able to keep tabs, to be able to make more informed decisions when they want to put their eggs into that company, or like diversify or do other things. Yeah, that's it for me.
Thank you so much, Sarah. You're right. You see, just like Sheyi said, we these days we want to quickly we want astronomical returns in a short time, and that is why things we see on internet are usually very, very shiny. When you see, especially the forex, so when you see a lot of forex traders, I've been involved in forex, and I know that most obviously people make money, but most of the forex traders, they make like 80% of their income from actually selling, getting more people to teach, selling, maybe selling their courses and stuff. Is actually the person told me personally that she's been trading forex for a long time, but now when you are teaching me how to trade forex and you're telling me that I don't really trade forex anymore, I'm just focusing on teaching people so that they can also get to that level. I'm like, oh please, tell me, you're making more of your money from trade, from getting people like us. Don't tell us that because if you are telling me that I'm going to make a lot of money from it, so why are you backing away from it and saying you want to focus on? Are you that noble? So she actually told me that that's right. She makes 80% of her income from trying to get more people and selling courses and stuff. So social media has, and the problem is that you just want to trade in forex, you focus on it. You are not making any money from extra money from selling courses, and eventually you put a lot of money in it. You might even borrow money and put into it, and you might end up losing it, which goes back to mental health again. So I feel like not everything that is shining is gold anyway. That being said, what I usually recommend is that because as an individual investor, you don't have the resources to really properly pick stocks, and there are a lot of analysis that goes into picking stocks. I mean, we have the fundamentals and technicals, but you still have to really dig deep into companies or funds to really know that, okay. So that is why I usually recommend the fact that don't day trade. Don't try to get in now so that you can quickly make some money and get out. No, most times day traders don't make money, and I'm saying it for a fact because I know people and I've been into it. So day traders, 90% of day traders don't make money. They usually lose their capital. So the best way to invest as an individual investor is long term. So invest in companies that you've done their fundamentals, you've checked the financial performance over the years, you've checked technical analysis, you've seen what they've been doing, you've gathered information around the board, and you understand their business model. So invest long term in those companies, and those companies that have been here for ages. McDonald's, the Apple, that those ones are still going to be there. Like my sister said, the Nigerian breweries. So obviously they did research and they felt like, okay, this company will still be there for a long time. So they invested in it long term. That okay, something I can still I can be getting dividends from it and this thing. Imagine how much dividends you'll be getting from 1970 something. Imagine how much dividend you'll be getting in 2021 from a company invested a long time ago. So it's about really investing long term rather than the short term, because a lot of people want to just quickly get the returns. Day trading, trying to invest this week and take their money out next week, rather than thinking long term that, okay, am I comfortable investing in this company long term? That do I understand their business model, and is this business going to stay in existence for a long time? So, but because we don't have the resources, these investment companies, they pay a lot of money in subscriptions, to get that first-hand research information on companies. Some companies even just call them. Some companies call them to tell them, to give them updates that, okay, our company right now, we've invested in this right now. So they get so much information from companies and from research, from, stuffs like that. So I feel like we are not privy to stuffs like that. And I feel like uh, long term is still a more reasonable way to invest if you're an individual investor. So the platforms I usually use for research and information, you can use Bloomberg, Yahoo Finance, but there's one actually, Market Watch, that you can download. It's an app. They give you information and research and even analysis sometimes on companies. So you can write it down, Market Watch. So yeah, you can download the app and always read on it, different companies, different information as they get it anyways, they send it to you. So that will obviously help you to make your decisions and how to pick stocks, and even if it's bonds or stuff like that. And there's trade economics too. That one, you can get information too on trade economics. Yeah, so that's that.
In
Any
addition to
oh
what
yeah.
Yusuff has said, I think I just advise everyone to read widely. Okay, just read widely. Try to read also. So for me, I try to at least read about 6 different newspapers daily, right? And I try to check up on them every now and then. You would pick up things here and there. Also, investment banks, right? Top investment banks. If you could subscribe to their newsletters, right? You would get certain information that even the average man wouldn't have gotten, right? Fine, you might not get what the future is holding, right? But on average, not the reading culture is dying. Okay, so if you try to improve your reading, okay, you would be better off for it, compared to perhaps 80% of people in the room, right? So just try to read widely as well. Try to credible sources, of course, right? You don't want to read something on Mr. Blog or just try to make sure that you're going to take in investment decisions, right? Because these are quite important, and the impact on mental health. It's important for you to focus on something solid. Yeah.
All right. Thank you very much. Sarah.
Thank you so much.
Okay. Is there any other questions, additions?
Folashade asked the question.
Okay. Folashade asked a question that, for 1 second. Sorry, Folashade. What is your definition of long term? So long term is, to me, anything that's over, to me, long term for me is that I put funds in my long-term investment that I don't need at the moment, like in a couple of months or even in a couple of maybe 5 years, I don't need it at the moment. And I'm not planning to divest from it unless there's a serious situation, or maybe I feel like I have a change in art with the company or something. But long-term is just like foreseeable future for me, that maybe many years after, let me just keep putting money in this company that, okay, eventually, in many years, maybe in another 10 years or more, then I can now think about it. But really, the joy is in seeing your money grow and getting dividends from that company, to be honest. So even if you don't get dividends, I mean, seeing your equity grow in a company is really, to me, it gives me joy. So that's why I don't really think short term when I invest in companies like that. Usually tech companies don't give dividends, but they usually have the ability to grow faster than the ones that give dividends, because obviously the dividends that they don't give out, they invest it in stuff that will make the shares even grow faster. So usually when I invest in tech companies, or for instance Tesla, when I invested in Tesla, for instance, seeing that kind of astronomical returns, I didn't think about really taking it out. I was just like, wow, okay, let me just keep doing this, because it was motivating me to keep it and keep hold of it and still continue investing in it. When you see stuff like that, you hardly want to even take it out. So what can you say about the difference between traditional finance and behavioral finance? All right, Mimi just said, what can you say about the difference between traditional finance and behavioral finance? I think Seyi answered that question, saying that behavioral finance is just about our personal, is more into our personal traits, how we behave. It's more, shall I say, emotional, or a kind of emotional investment, whereas the traditional is what we used to see before this generation, where we fundamentally analyze companies before we even invest. So just like we said, we are seeing more of behavioral finance these days than traditional, because we are having so many alternative investments that are really driven by the behavioral traits of investors, the supply and demand, how people, the craze around that investment, and how people are really how people are buying and selling it anyway. So like Seyi said, if Elon Musk decides to divest in Bitcoin, you see it tank. So it's more of behavioral finance than really anything fundamental. Okay, Shade asked where should we be looking for investments? Okay, let me see if that's just the last question. Such that the principal is okay. Okay, yeah. I'll let Oscar answer this. Sorry. So where should we be looking for investments such that the principal is safely guaranteed? Because he has just talked about fixed income. So I'll let him answer this question.
Sorry, before Oscar answers that question, because I see that question is a little bit big. I just wanted to ask, it's just a quick one, just to understand more about investment. when you invest, say, in a company like Samsung, for instance, or the Tesla that you talked about, and say in the next 10 years, the company is being sold, what happens to your investment?
It depends. Being sold to another investor.
Yeah. Say, for instance, what happened with WhatsApp and something like that, whereby somebody else buys up the company. So what happens to your investment? Is it like, I don't know, what happens to it?
Yeah. Oh, I get what you're saying now. Okay, so if you invest in a company and then they are being acquired by a bigger company or something like that.
Yeah, something like that. Yeah.
Yeah. Usually they give shareholders. There's usually they give your shares would be what's the word again? So your shares will still be there, but obviously you own a part of the bigger company now. So when I had shares in, what was this merger between Walt Disney and I can't remember. But anyways, you now have a share in the bigger company because obviously you are still shareholders of part of that company. So based on the market capitalization, so it's like, okay, you have a company, you have shares in this company, yeah, but they are now being acquired by a bigger company. That bigger company will now have a newly calculated market capitalization. So market capitalization is the value of the company. So when this big company now acquires this one, they have a bigger market capitalization because obviously they've added another company to it, and adding synergy of the company and the market capitalization of that small company. So they've added it to the company. So they have a bigger total market capitalization now. So you own a percentage, since you already had a percentage in that one, so you now own a percentage of the bigger company. It can be, obviously it's less percentage, but when you get the calculation, you just find out you own like that percentage of the bigger company. So, but usually the stocks rise, so it's usually it depends anyway. When the stock rises, obviously you own more shares, the value of your shares increase and stuff like that. But usually if it goes right, you get more shares. But your shares they don't just go into thin air like that. You now have shares in the bigger company that have just acquired their company. The only reason why your shares would just go adrift, just go into thin air, is when they go bankrupt and that company does not exist again. So if Tesla files for bankruptcy, or like Lehman Brothers, people that own shares in Lehman Brothers now, when the shares went from wherever to zero. So zero means that you don't have, your shares are worthless. You don't have any value. It does not have any value anymore. That's the only time you lose your shares. But if it's
Is
acquired,
there a way to know if something like that is about to happen, so that you can probably remove your money or, or sell it off or something?
oh yeah. You know that the company is about to be. Oh, okay. If it's going bankrupt, that's the thing though. It's financial performance. So you see the trend. So if you do a trend analysis, you see that, okay, this company over the last 2 years, their profit have been reducing, or there's liquidity risk, or there's maybe credit crunch or something that is up. There must be something that is happening to the company that will now make them go bankrupt. It's obvious that they have been struggling with it, and their audited financial statements will show it. But we've had cases where they've been cooking the books, and you wouldn't even know. They will say that this company is still really good, but meanwhile they are struggling. But aside that, usually you'd see it in the company that people that really stay the course are people that this is what behavioral finance is about. People that really stay the course are people that believe that obviously there will be a change soon, or maybe they feel like uh, do something about it. They just still have some kind of, they are optimistic, sanguines that still have optimism about the company, that okay, hopefully, obviously the board is seeing this, they are working on it, or you still have believe in their business model, their fundamentals. So those are the people that still stay the course, that okay, let's see, I think this is going to work. Let's see how it's happening. But usually you see the trend. And then at that point, you can decide if you want to now take your money out, or just stay the course, and if you stay the course, is higher value for your money. So the riskier it gets, the more returns you get. I hope I answered your question.
In addition, in quick addition to what Yusuff has said, relating to the company being shares in the company being bought off by another, it could be a good thing for you. And like he has said correctly, your shares will probably only
Shay, we can hear you. Shay has just gone off. Okay. So for
different situations like that, your shares won't disappear, right? But you just find out that at the end of it all, your returns are still guaranteed. You still have your holding value as well, and you realize that, of course, number will reduce because now you're holding shares in a larger pie, right? So obviously, if you're having about 5 shares in a majority of a total of 10, you probably now have 2 in a total of 15, something like that, Sha. So yeah, that happens. All right, just wanted to show that thing as well for you to.
Okay. Thank you, Shay, for that. I thought I lost you, but I was the one that was actually kicked out of the Zoom.
Really?
Yeah. So that's fine. Yeah. So Shay, please answer Folashade's question. She's asking about investment that can stably guarantee your, was it returns? She said now.
Your capital. I think she said capital.
Oh, the capital.
Right?
Yeah. Go on.
Yeah. Well, so out of the investments we've spoken about, not a lot of them guarantee your capital. The ones I can readily point to, and I know you did mention fixed income. The only downside to fixed income is that inflationary pressures can affect the value of your capital. You might get your capital back, right? So you might get your 10 naira initial capital back, but in 5 years' time, say inflation has doubled, your 10 naira won't be worth much anymore. Probably be worth 5 naira or 2 naira, right? But real estate, right? Real estate provides buffer against inflationary pressures, right? It's a good hedge, right? Especially when you get returns in form of, say, rental income, because you find a lot of landlords actually bump up the rent in line with whatever the inflation is saying. So land, the parcel of land has always been, that's the one asset we were taught growing up that land will always appreciate, right? You can almost buy land and go to sleep, right? If, aside from money issues where the land is not even yours again when you wake up. But land will definitely appreciate. So you want to be careful with equities because equities can erode, everything. Capital, promise of return, everything can vanish. And even alternatives, which you spoke about, alternatives actually can, completely erode your capital, right? We're talking about a painting. Imagine that painting had even the littlest of scratches or, just a slight dent, that completely ruins the value of that painting in the eye of whoever values that painting, right? So those aside, those which I've mentioned, I think those are the safest in which you can still preserve your capital to a certain extent, right? And even at that, you still have to be watchful. Like I said, there are all sorts of things that can, the house can go up in smokes. Your land can be reclaimed by the government, or somebody comes and says, the documents were forged, right? But yeah, those are, I think, the best chances.
Thank you, Oscar. I was going to add to Folashade's question that, okay, based on which of these investments can you rate the investment based on accessibility, like capital and ease of accessibility, like the ones that you can quickly get via electronic platforms, and the amounts required to invest in this.
Yeah.
So can you put a rating to it, like maybe list them based on that?
Well, I think first and foremost, the most common and which probably has the most market cap globally still is equities, right? Equities are everywhere, to be honest. You can access them online. There are a lot of investment companies that are making investments in equities. Quite possible, even from the comfort of your home, right? Assuming you've done your due diligence anyway. So obviously, equity would carry the highest rating, ease of accessibility, ease of investments, right? Also, because investment companies also carry a product called mutual funds, right? So with mutual funds, this also provides you an opportunity to invest in different types of asset classes. Yeah, it's a mixed bag of asset classes, right? So that can also provide you access to fixed incomes, right? Bonds, would be very expensive for a single individual to invest in, like we discussed. So the advantage of a mutual fund is that you can get a little piece of, a government bond, for instance, or a corporate bond, right? So I would say the help of mutual funds enable equities, fixed incomes to be a bit more accessible with all collectibles such as wines, artifacts, rare items. Those are, I would call those probably the least accessible. Even with private equity funds as well, right? You'd find that it's not that easy, right, to just invest in any company or in venture capital firms.
Yeah.
If you understand what I'm trying to say. So I would rate highest to lowest. That would probably be equities and fixed income up there, right? And your alternatives obviously will rank further down. Yes.
Okay. Thank you very much, Shade. I hope that answers your question. So you start with for people like us that we don't really have much income, we can start with equities. I know that for sure. I know bonds. Bonds are the safe. They are safer than the other types of investment. But to really get much on bonds, because the interest rate is always so low. So to really get much on it, you have to put a lot of money in it. They can be giving less than 5% or something on bonds, really. So to really get enough returns on it, unless you just want to keep your money that, okay, although I don't need this 1 million for now, let me just keep it. I don't really mind the returns, even if it's that low. I don't really mind it. It's better than putting it in my savings account. That's when you really put it in, because you know that is safe to some extent. It's not like government bonds. Most likely, government bonds are really safe. The government is not going to, except for different for just few cases. The government will pay you back. And then corporate bonds, as usually, you get money back. But equities is a lot riskier. Although that's very easily accessible, because, like Oscar said, from the comfort of your home, you can invest in shares. But still, it's very risky, and it doesn't require a lot of capital. These days, you can even invest with £1, with 100 naira, 1,000 naira, the amount you have. So usually, I would say, yeah, you can start with equities, bonds, and then alternative investments. Is there any other question?
I have a question.
Yeah.
Okay, so I'd like to know, organizations or companies like Piggy's Best, Carrywise, I don't know. I'd like to know where we could classify them under, if they're under investment firms as well. Because they encourage people to save, and they even like tell people who choose to save with them that they would gain an interest for saving. So I'm wondering, is that also a form of investment, or is something else?
So what do? They usually just encourage people to save, and they invest the money. Do they invest the money?
Yeah, they don't they just encourage people to save with them. It's not like they They say that
Yeah,
they,
there are
they would
asset
invest in
management
money.
companies anyway.
Mhm.
Asset management, yeah. They
Okay.
it's also important to know, what they then go on to invest your money in, right? But essentially, they're under the asset management class, right? Yes,
Okay.
you can call them a form of investment company. I don't know if you know Farm Crowdy, right? These ones actually invest your money in agriculture.
Yeah.
A parcel of land somewhere, in the south or in the east, or there's a farmer there, growing maize, right, and they'll guarantee you returns, right. So for like the likes of piggy vest, cowrie rice, yeah, you can class them under asset management company. You just need to understand better. So what they then invest in? I'm sure they invest in equities and bonds as well, and maybe some other alternatives, right? Yeah,
Okay.
and guarantee you certain minimum returns, right? After taking out their own commission, or management fee. So yeah, they are fintechs, right? Anyway, they are
Yeah.
fintechs, finance
All
houses,
right.
right?
Thank you, Oscar, for that.
Thank you, Oscar. Any more questions? I think we've
Just wanted
spent.
to. I just sorry before you go on. You were meant to. Oscar was saying that you were meant to give us a lecture on. I think the first part of.
Yeah.
Yeah.
Yeah. But looking at it now, I think it's going to take a lot of time. So I might just put it on next. Put it some another week so that we can fully dive into is the equities and the shares, so we can fully dive into shares and how you can invest in shares. I think that would be another session for on its own, and then we can properly look into that as well, rather than just putting it into this session and just uh, trying to rush into it, because we've spent a lot of time on behavioral finance today and the other types of investment, which is great because these are the new things that we really need to talk about in finance these days. So yeah, if that's okay, I think I'll just put it on maybe upper week or something. Is there any more questions on this session, fixed income, alternative investments? Have you even tried any alternative investment, and what's your experience in general on alternative investment? Has anyone tried alternative investment? Has anyone tried investing in some bonds? Do you have positive feedback, positive reviews, or any feedbacks or anything that you would like to share?
Aside from bitcoins.
Yeah. Who has purchased a couple of bitcoins because of the craze recently?
I know if AK is online, AK has definitely bought some. I think Shubomi, I see Shubomi online. Shubomi online.
Oscar, I was waiting for you to call my name, please, man.
Not gonna lie, yeah, probably I'm not the duty.
Just out of curiosity, I would like to know if it's wise to purchase cryptocurrency, despite the fact that in Nigeria, our government is strongly against it. You think it's still a wise form of investment or not?
To be honest, the stance on cryptocurrency is a bit divisive because the government, on one hand, through the CBN, has come out to ban banks from participating, while the vice president is also saying, no, that's the wrong approach, and that we should look to understand it and regulate it. But we can also look outside Nigeria and see what the world economy is doing, right? There are still a number of companies that are shying away from it, while you find some economies have actually embraced it and, accepting payments through it. Now, what I would say is typically you find that the developing world usually lags behind the rest of the world, right, in taking certain decisions. And they later, maybe 5, 10 years down the line, come back around to embrace that decision. If you look at crowdfunding, right, crowdfunding has taken off years ago in developed world. It's only just recently the Nigerian SEC, right, has approved rules for crowdfunding to be allowed in Nigeria, and even at that, even at the limited rates, right? So yes, I wouldn't say completely ignore Nigeria's stance on cryptocurrency. I would, however, say because of the nature of the investment itself, right, being extremely risky, I would say, exercise caution, right, in investing. And the fact that, the banks have been banned, obviously, has not really stopped people, right? Because even before the banks were serving as an intermediary, people have been receiving and making payments through other platforms. So, some of Nigerians are just, laughing at the government and saying, so what's the impact of this, right? So I think it's something Nigerian government will come around to. And this is because to be honest, my personal opinion on cryptocurrencies, I find it a bit too risky for my preference, right? And that's because I can't, grab a hold of the fundamentals, right? So that's why I won't completely say, go ahead and invest. I don't know, in 5 years' time, it might have gone bust, right? And in 5 years' time, it might still be there, and a lot more countries might have embraced it, right? So I think it should just be a personal opinion, right? And if you think it's something you're interested in, right, I would say go for it. However, be cautious, right? Don't do something that would sink you, and if not, just stay away.
Yeah, just to add to what Oscar said,
Thanks.
yeah, obviously you should be cautious. Like for me, for example, my plan is to put like 20% of my investment into crypto. I fully get it that is risky, but I know the blockchain technology is here to stay. It's not going anywhere. It's a new digital age, something new to the digital technology, and I feel like blockchain is not going anywhere. So every coin that's built upon the blockchain network is going to stay. So it's just a case of you finding which one you want to take the risk on, understanding that coin itself before you put your investment into it.
All right, thanks so much for that.
Well, yeah, they are both right anyway. But what I usually do when, because obviously I have, just like Oscar said, having, when you think about the fundamentals of Bitcoin, it's really difficult to place over of it. So I feel like what I usually do when I feel like Oscar AK puts 20% of his income in cryptocurrency, which I feel it's based on your personal preference. So I feel like if you feel the need to, you can just put a little bit of your income as well into it. Something that you feel like, okay, if I lose it, that's where risk management comes to play. Understanding yourself, feel like, okay, if I stand to gain a lot from this, if in the next 5 years it's really acceptable in a lot of places and the value is a lot more higher, I can. And the opposite side of things, obviously, if it goes bust, I know that this amount is not really going to make or mar me. So it's okay to still put it in it, so that you can still put that amount in it. I feel that that you're okay losing, and that that okay, it can be significant in the future. But that's just the personal,
Even if I put,
personal
sorry,
opinion.
even if I put 10% of my money into it for 10 years, that's pension money. Me losing me losing all that money in 10
That's
years.
10% is a lot of money. You
It's a
have
lot
to
of money.
you
Yeah.
need you need you need conviction to put. That's why I say AK is strongly
No. Sorry,
opinionated
Yusuff,
about.
I'm not. I didn't say 20% of my income. I said 20%
Instead of
of
the
my
savings,
investment portfolio.
Oh, it's okay. All right.
Yeah. 20% of income. That's a lot, man.
I know.
Oh,
So
I had 20%.
That's why I said that. That's pension money. That's over pension money.
yeah. So yeah, it's just about you really deciding. If you are very risk averse, I feel like rather than just staying away from it totally, I feel like, because obviously blockchain is yet to be honest, because it's about time that we get that change in the financial system anyway. So
AK has always been a risk taker anyway. So.
yeah, so yeah, which is good. So I mean,
No, but just to add to that as well. Yeah, for me, yeah, it's very important for you to at least have your normal savings first. Have your runaway money before you start putting your money into investments, because you don't want to take that risk where, all your savings is in an investment account. If that investment account goes down today and you need that money today, you're not going to have access to it. So it's good to have your backup funds before you actually look to say investments.
yeah. Yeah, very, very important. You need to get your emergency fund that you know that okay, this money I can put my hand into it and it's very accessible, easily accessible to me before you now put money into investments. Because even aside the crypto, aside the risky investments, you can't just invest in shares and just because you need money today quickly take the money out of it, because obviously it's going to affect your returns, and you might even be taking it out when the stock market is deepening. So I feel like that should be separate. That should be a separate portfolio. It should be separate from your savings, emergency funds. So yeah, that's right. Oscar was going to say something.
No, I completely agree with everything you said. Yeah, that was all I was going to say.
Okay. So any more questions? Any more opinions before we round up the session for today? It's been a very, very interesting one, very insightful as well. Any more questions on alternative investments and fixed income?
When you say emergency funds, are you just talking about savings account without interest being paid on savings account, or there's a kind of investment that's called emergency funds?
No. Yeah, it's no, there's no. It's not investment. It's like putting money in your savings account too. Something you can easily get access to. So you can put in your savings as long as it's a savings account that you can easily take money out of it. But it's just that not the one that you are using, that you are always using. So it's not a savings account. Maybe probably a different bank. Just put it somewhere separate. That okay, this money I'm not touching, only in the case of emergencies. So you can easily get to that money, I get access to that money, but you know that it's not something you're touching unless you have emergency.
Yeah.
That's
An
emergency.
account that you don't have an ATM for.
Exactly. So you try to restrict, you put challenges to it that won't make you really get access to it, but you know that you can still get access to it. That's it.
I heard somewhere that your emergency fund should have like at least 6 months worth of your living expenses. Probably. Yes, because it's emergency. And I'm thinking that is that not a lot of money that is just sitting fallow?
Yeah. See.
No,
see,
6 months is too much. In my view, 2 months, 3 months should be fine.
Yeah.
I think you just need to assess yourself. Like, if you lose your job today, how long would it take you to get another job? Kind of thing. I think that would help you make decisions. If you lose your job today, would you be on the streets? Would you not be able to afford food? I think these are the kind of things you need to put into consideration before you set that money aside. For some people, maybe 6 months is what they need. For some people, they need 1 year to be back on their feet. So it really just depends on you. But yeah, I think it's okay for you to put it in an account where you still get paid interest. So some banks give 2, 5, 6, whatever percentage they give. You can put in those accounts. That's okay as well.
Yeah, exactly. So you don't know, 6 months is a lot. I feel like you are losing value for the money if you put that much money in just a savings account that is giving you 1.5%. I feel that's not financially wise. So what I feel is that 3 months should be okay. I feel 3 months that you know that okay, if you lose your job today, you can still cope with that fund for 3 months, depending the time you get back on your feet. But the rest of it should be put in proper investment that will generate more returns. So thank you for that, Falashade. So thank you everybody for today. Thank you very much. It was a really wonderful session. Thank you, Oscar. Thank you, Eke, and everyone, Sarah, Dr. Adejumoke, for contributing, Polashad, everyone, for contributing to this session today. And don't forget, next week is going to be our scholarship week. We'll talk about scholarships, how you can get scholarships, and really what you should be focusing on when you're trying to apply for scholarships. But after that, we are going to be having a Daytopia competition. I hope everyone has registered for it. So I was just going to talk about the Daytopia competition in a second. It's a presentation competition. We've had presentations in the past weeks. where mentees come and then present on any topic. But this one is just a bit more structured. Over the 4 weeks in April, we'll have all the participants present on a specific, not specific topic. They can choose any topic on a specific theme. So we have personal finance, we have motivation, impact of COVID, and I think the last one will be entrepreneurship, I think. So you can pick any topic from those themes. You just have to make sure that your topic is around that area. And the judges will be our mentors. As always, the way they give you positive feedbacks, constructive feedbacks, that's how it's basically going to be. It's just the fact that, they now get to choose who advances to the next phase until we get the final person. But it's just about bringing that competitive vibe into it. And then, obviously people can be more focused on it and be more determined to, make proper, better presentations, put more effort into their research, their communication skills. These are the life skills that we need out here. When you go for interviews, how can you communicate your ideas properly? When you go for meetings, how can you talk to people in a way that they will easily understand? That's effective communication. You are going to use your IT skills to develop your PowerPoint. So you are going to be ranked on the PowerPoints as well. How good is your PowerPoint? All those skills are very important. Your writing skills, research skills, very important in life. And Daytopia mentoring is really about bridging the gap between, the what you've learned in school and what you really need in real life, in the real world. So which is why we are going for this presentation competition, which is going to start in April. So you guys, I want to see everybody. It's not about you thinking maybe I'm not going to get to anywhere. It's about you actually preparing yourself for what is to come. So even if just motivate yourself and register and get into it, and let us it's going to be fun. Let us have a fun time, and the mentors are going to give you obviously constructive feedback. So let's.
Is there a prize for the winner?
What did you say?
Is there a prize for the winner?
Oh yeah. So the Daytopia champion will go with $100. So the last phase will be last week in April. So the last three will present on entrepreneurship. Just basically, creating a fictitious startup that requires 100, and just present it to us that okay, $100, this is the business and this is the profit is going to generate and stuff like that. So the winner goes on with the £100, $100, and then some other bonuses as well. So yeah, so that's the price for the winner. So I want to see everyone really psyched about it, everyone registering, and then please, our mentors, let's try to make sure that we are, for that month at least, let's try to make sure that we are always present so that we can have a collective rating, and then we can easily rank people, and then know the next people that will go on to the next phase. So that's it from here.
Can mentors jump in a competition as well? £100, $100 is a lot of money,
Anybody can, to be honest, anybody can. It's mainly for the mentees, but obviously anybody can go into it, as long as it's for fun. It's not really about, so we are all having fun. We are just trying to we are just
AK and Oscar are not allowed. AK and Oscar are not allowed.
We are just trying to have fun. So
why are we not allowed?
See, Shubi wants to join too.
Yeah, I can use that $100. That would be my small Bitcoin investment.
Obviously, to go to another Bitcoin investment. For me, probably go to William Hill with it though.
Shubomi, are you registering?
No comment.
I think we have Dr. Arijubok. I think you said 10 the last time, so we still.
Yeah, we have 10 people on now, so we still have a long.
We're still waiting.
We're waiting for people to join. We have not seen. Many people have not joined. Mimi is not there.
Yeah.
Yeah, she's not.
I'll start calling their names out now on the group.
Yeah.
They don't want to present. They are scared.
Bola too is not registered yet. So there are lots of people that are not registered.
That's true. Shade has not registered. Shade has not registered, I mean.
Shade has not registered too.
Okay. She registered now after this session.
I did register.
What did you say?
No, I was saying Shade should register. She should make sure she register.
She definitely. She has no choice. So that you can win the prize money, Abby. All right. Yeah, that's it anyway. So hopefully today is actually the deadline so that we can collect the participants tomorrow, and then the email will go out on Monday, and then we can start preparing for it. So please, mentors, your role for April will be to just try as much as possible to be present. We have to, especially everything, to be honest, so that we can have a diverse opinion about it. So it's not that just the 4 mentors will now be so we need diverse opinions so that we can properly select the people that will go on to the final stages. So that's it basically. And I'm expecting the presentations to be really good. Put energy into it. It doesn't have to be about money, but put effort into research, put effort into your IT skills, put effort into communicating properly, effectively, and then I'm sure you do great. So that's it basically. Dr. Adejumoke, do you have anything to add?
Yeah, I was going to say that I think it will also serve as an advantage if those that are actually planning on registering can probably go back and see other people's presentation, learn from other people's feedbacks. Even the mentors have provided us with lovely slides.
Yeah.
I was telling Dewale that looking at Dr. Tude's slides the other day, these are lovely slides that you can actually learn from. Don't come and just bring us a black and white script and just put in some effort into it. Even if you are going to know, even if you are going to not win at the end of the day, but pose as a competition. Like, let somebody see your slides and your presentation, this person is a competition. Put in some effort. Go. There are also examples of what is it called online. You can send any of the mentors messages to get one-on-one feedbacks from. What I mean feedbacks, I mean advice, tips from them before you come to the competition. Just put in some effort so that when you come, it shows that you are prepared and you know what you are doing.
True. Yeah, that is what. You're very right. And you can go back to the sessions to check what mentors have said about the feedbacks that they've given on the presentations that mentees have had in the past. It's good. It's a good thing that before this presentation competition, we've had presentations in the past, mentees presentation in the past, that you can really know what the mentors are really looking for, and the areas that they really point out in presentations. So those are the things you can go back to. You have all the links you can go back to and check that can really help you in the competition, not just for competition's sake, but for your own personal development. That being said, like I said, we'll have the participants, and we'll send an email out on Tuesday, so that from that Tuesday, so 3rd of April, we are starting the competition on the 3rd of April. So people can start preparing from that Tuesday to, you have to send your topic to make sure that it is acceptable. And from Tuesday, you can start preparing for it, and then you'll be.
Can I just overemphasize on something that you said? Emphasize on it. I know that all mentors are busy people. Oscar, AK, Dr. Tunde, Sarah, Shubomi. I know that you guys are very busy people, but even if you can just at least spare us that month, please try and be available so that we can give these people feedbacks. People like Abib, Khalid, And those guys that went to present in the competition can actually say how useful and advantageous some of these feedbacks have been for them. So this is not just about just coming to listen, but it's about impacting in people's life, whereby people can look back and like, oh, this person actually corrected me about this, and this is what I'm getting from it today. So please, let's, even if it's just for that 1 month, let's all be available here. Thank you.
All right, that's it. Thank you very much for today's session, and looking forward to next week, and hopefully see you guys next week. Thank you very much. Thank you very much, everyone, for today. Have a lovely weekend.
All right. Cheers, everyone. See you later.
All right, see you.
Thanks, everyone. Bye.